involved.
Exactly. Exactly. That's exactly. Oh, yep. See, we've got people chiming in the chat already, Eric, about you'll have to tell Cindy that she was fabulous for her first conference with
So
us.
it worked out really good because Scottsdale's home for Cindy, so she was excited to kind of come to her first TMC event. She loved the participation. I'm sure she'll be back. And yeah, she's a show stealer.
Yeah. Well, good afternoon, or maybe not afternoon for everybody, because I know it's not for me quite here yet. This is the latest in mortgage today. We're going to just let a few more people roll in here before we get started really quickly. But yeah, we had a lot of new people with us this round, or people that hadn't been with us for a while. And it was just really nice, of course, to see everybody and be in the warmth and all of those good things in Scottsdale for sure.
And I heard attendance was really awesome, right?
It
Yeah.
was.
Yeah.
Yeah, it was. It was one of our bigger spring conferences. I would expect it to continue to get that way as we continue to grow. We have some aggressive growth plans here for the year, along with some new projects and stuff that Jody has us all working on. So you've known Jody for a while, so you probably know what that's all about and what that's like. But yeah, I think we'll go ahead and get started. Thanks for everyone for joining us this afternoon for the latest in mortgage today, or this morning, wherever you are in the United States. Um, I love the fact that I have a person with me that I just recently got to reconnect with. That has been in our network for a long period of time. Took a little bit of a sabbatical away from us, but we convinced him to come back and join us in Scottsdale, and absolutely loved having you with us. It's Eric Roman, who is the Chief Operating Officer at Nations Lending. Eric, thank you for doing this today.
Yeah, my pleasure. And it was really good to be back and see everyone. So real excited to kind of reconnect.
Yeah, so you want to share with everybody where you are right now, because you can tell by the background that you're somewhere very appealing and you've got on your shirt that kind of matches that.
So we're in Montego Bay. We're in Jamaica for our President's Club this weekend. We've got our top producers here, and we're celebrating them this weekend.
Yeah. And he's here with us today, everybody. I mean, it's like, I feel like not everybody would do that. So appreciate the fact that you'll spend a half an hour with us today chatting about some things that are going on in the industry. As those of you who have attended this before know, this is a place to help us unpack a little bit what's new in mortgage, what's working, what's shifting, and what it means for everybody here. So to get us going, Eric, I would love it if you would just share a little bit about Nations Lending so that the audience understands kind of like where you're coming from and who Nations Lending is.
Sure. So we are a Cleveland-based IMB founded in 2003. We've got a platform built on distributed retail with a little flair for consumer direct in there. We're a servicer, primarily delivering to Fannie Freddie Ginnie, and we've been around for a while, and it's been an excellent journey.
Yeah. And how long have you been with Nations? I know ever since I've known you, you've been with Nations, I think.
So I was one of the original nine. So from day
Oh,
one.
so a box of donuts. I say if a dozen donuts covers the group on a Friday, you truly are at like a startup.
Yeah, it's been an incredible journey. We've got some really amazing owners, and um, it really feels like family, and it's been incredible.
Yeah. Well, that family word is going to trigger me to go into the, the next topic that I want to talk with you about. For those of you who hopped on a little bit later, Eric and I at the beginning of this, we're kind of talking about our Desert Disruption conference just ended. What's been over a week? It's been a week and a half ago already. Seems impossible, but time just flies, and we're already moving on to planning for Austin. But you are back with us, and you brought a fabulous Miss Cindy Baird into the mix with us as well for the conference. So I wanted to, before we get started on other topics today, I thought I would ask you, like, what was your favorite like conversation or session that you or Cindy, either one, like experienced while you were there with us and the TMC family in Scottsdale?
So I'm a little biased, but the digital transformation was our favorite. Um, just kidding, but we led that panel and it was really highly attended and we got a lot of really great participation. So it was just fun.
Yeah, fun to be back in. Is there a person or people that you either reconnected with or met for the very first time that's going to be your Austin? See, I'm going to work this in here that you're going to be back with us in Austin. That's going to be your Austin buddy in September.
Well, one, count us in for Austin. We'll be back.
Yes.
But it was really great just being back in the lab setting and reconnecting with some of the OG kind of lab partners there, Craig Ungaro, Mike Metz, and then we made some new friends over at Revolution Mortgage and Atlantic Bay. So it's just kind of great to see some of our friends there and make some new ones.
Yeah, absolutely. Absolutely. So let's talk a little bit now about what is kind of going on out there in the environment. And this was a topic of conversation in the lab group that I was in. And it was related to the trigger lead legislation that just took effect, I guess, passed a while ago, took effect just this last week. Um, I would love to hear from you because there was debate going on. Oh, Jody's thinking that your golf game was going to be like your favorite thing.
So I did golf this morning, but yeah, shout out to Jody on that. We sneak around in anytime you can, right? Made some new friends there too.
Yep, yep. Well, it's good. You can meet new friends everywhere. Every event that you go to that's TMC's event, I feel like that's a big part of it. Absolutely. But trigger leads. The debate was there were some in the room that felt like with the new trigger lead legislation that they had absolutely nothing to worry about anymore, and their consumers were not going to get hit up by anybody other than them, let's just say. And that may be a little bit of an exaggeration, but the other part of the room is like, no, there's so many carve outs in that legislation that you still need to be a little bit more cautious with that. And I know you mentioned that you service, so it may not impact you in the same way, but just in general, like, how do you feel about the legislation? And do you feel like what do you, the benefits of it, number one, and what do you feel like benefits for consumers, but also benefits for your company? Do you think it makes any difference, or are you just going to proceed kind of in a manner that you already do?
Yeah, I think it's a big win for borrower or consumer protection, right? It's a long time coming. Originators will, take an application and pull credit, and then these consumers get bombarded. So I think there's a big win in that protection. For us, because we service, I don't know that it's as big of a deal because we have a book of business with a lot of relationships out there. I don't think it's going to go away overnight. I think activity is still going to happen. I'm a little nervous to see what happens on the credit side to see if, credit prices continue to get pressured and we see more increases coming there as some of that trigger revenue starts dipping down. But overall, we're in favor of it and we think it's a win.
Yeah. Yeah, I do too. I think that anything that you can do to get, especially older people, I mean, some of the stories that we heard of like older people getting bombarded with 148 calls or messages in a matter of a couple of days. It's just so confusing, I think, for the consumer, regardless of who you are. It just seems a little bit like an ambulance chaser, maybe.
It's chaotic for sure.
Yeah. Let's talk a little bit about what's gone on this week, or it's actually last week when we did not meet. About MBA does a weekly survey, shows mortgage applications up 0.4%. Rates, I would say, based on what I've heard, kind of holding stable, not big fluctuations. Um, are you seeing in your pipeline the applications increasing? Just kind of share with us what you're seeing related to that. Or does it just still feel like, well, and now we've got other things going on in the world, of course. Does it seem like it's not steady? It's still a little choppy, what's going on in the industry?
We're definitely feeling it. There's only been a handful of cycles that we'll see like a really good Q4 leading into Q1. Our pipelines are performing in Q1. We're going to have a really strong hot start to the summer market. So, um, and remember, we've got a consumer direct team, so they're really rate sensitive. If rates drop to right, that's right kind of where they're hovering right now, six, sub six. That team really spins up pretty quickly on the refinance side. But it's definitely picking up in retail as well. We're seeing some really great stories with some of our operators out there that are seeing activity that's like 25 to 100% increase just in Q1 from this year, last year. So really great stores. We're seeing it pick up.
That is fabulous. Do you feel like there's still, okay, so sales dipped a little bit, new listings up. Of course, it's that time of year for some of us that deal with the snow that we were talking about earlier starts to go away. So I'm in my environment, that happens too. Not for everybody, but are you seeing, or is your LO, your loan officers, are they still seeing hesitation for people, that people are still waiting, thinking that there's going to be a little bit of a rate dip? Or do you feel like people are just kind of over that and moving on? I mean, some people don't have a choice, obviously, if they have life events happen, but do you feel like it's still as sensitive as it was?
It's not for us. Our markets are really active. I think that lock-in effect is starting to wear out. Life events are happening. Credit debt's at an all-time high. And if you're in the market to purchase, it's really about affordability on payment, right? Like a
Mhm.
six versus a 5.75 doesn't necessarily change, your payment that much. And people are taking advantage of it.
That's fabulous. That's fabulous. Recently, the NBA came out with a statement that first-time home buyers shouldn't be treated as a niche anymore.
I
Um,
saw that. Yeah.
yeah, I think the statement was they are the market, if I remember right. I don't quote me on that though, but I think that was the statement that was made. Do you have at Nations, do you have specific focus, or are you doing anything different with that market of individuals than you are for anybody else, I guess is the real question.
We're not doing anything specific to first-time home buyers. I think it really depends on our operators and their markets and how they source business. And really, they cater to whoever partners with them and whatever referral sources bring that business in. We do a really solid amount of first-time home buyers, but we're not doing anything specific there today.
Yep. Um, Focus on DPA or FHA products at all? That's probably something that you guys have always had in your back pocket. You've been around for a while now. Um, Anything
So
relate?
DPAs are something I think you just kind of have to offer and support. They're a little bit of a loss leader, but if they help people get in homes, we're all for that. On the government side, we're probably 70-30 conventional to government, which is really kind of like the market. And there's just some really great, products out there in FHA and VA that USDA that'll help borrowers get into homes. So we'll do a fair share of it. We pull a lot with Ginny.
Yep. So one of the things that was talked about a little bit, I don't know if it was in conversations at conference, but non-agency, non-QM, not necessarily directed at first-time home buyers, but NewRez reported 198% increase in non-QM production in 2025. I'm sure the other non-QM providers did the same. That was the only stat I could find, so that's why I'm using them specifically. But servicers obviously are getting more competitive in the non-agency space. There were some questions that came up about liquidity. I'm sure anybody that was doing non-QM back in March of 2020 has may have some feeling, yeah, may have some feelings about that one. Um, are you like leaning into that segment, or I mean, you've got your tickets, so are you staying more agency focused? And what are your feelings about that particular type of product, I guess?
Yeah, so our core is agencies, so we're we primarily focus there, but I think the non-QM space is a great market. I personally don't think it's as risk sensitive, especially as what we saw back in 2020. But I think the liquidity is there, the risk diversity is there, and it's a really good market for creditworthy borrowers.
Yeah. Yeah, that don't have a way maybe to qualify in a different manner. So not saying that it's not part of your process at all probably means that you're losing at least some segment, however big or small, of your market, and somebody else is coming in and capturing it, don't you think?
Yeah, absolutely. We just don't source a ton of it, but we'll do it as it comes in, and it's probably like 1% of our business though.
Yeah.
There's certain markets, like California is a great market for non-QM, right? There's certain markets that you can really source it well.
Yeah. Yeah. You have the advantage. Midwestern, relatively, and this wasn't on my list, but I would think that where you are, homes are still relatively affordable. We
Yeah,
all
that's
have
right.
the insurance things going on. We all have, all of those increases that have happened across the board. But I've often wished that I was in Ohio for the price.
Yeah, we're lucky. We have a modest increase in values and home prices, and it's a really affordable market.
Yeah. Um, Moving on to a different topic, and I can't wait to hear how you feel about this. So CHLA came out. IMBs originate 84% of all single family mortgage loans, 90% of FHA loans, 95% of VA loans, 95% of Ginnie issuance, and 75% of GSE loans. Any of those numbers in there surprise you at all? They were higher than what I thought they would be.
So that story's reversed from years ago, right? Like, banks
Yeah.
really dominated and really only a handful of banks dominated that space. If I go back probably 10 or 15 years.
Yeah.
Now we kind of know what's happened with regulation since then and kind of the pressure on MSR and their balance sheets to kind of drive some different decisions there. But yeah, IMB business has really taken advantage of that gap and filled it. And it bodes well for companies like ours.
Yeah. The other place that I thought was really interesting because we see a lot of banks and community banks due to CRA focus on, the affordability issue maybe a little bit differently. But this survey said IMBs actually outperform banks in loans to minorities and other underserved borrowers as well. And that was really surprising to me because I feel like the banks automatically kind of need to have more of a focus in their footprint on what they were doing. But I thought that that was an interesting fact out of CHLA's information as well.
We see it in our business. We do a lot of minority segments, sometimes lower FICO stuff. So I feel like, there's a real opportunity for IMBs to kind of cover that underserved market.
Yeah. Yep. So what the news that came out related to this survey and study this week was the Fed Vice Chair, Michelle Bowman, outlined a proposal to reduce the capital that banks must hold against mortgage origination and, of course, their servicing rights, which bring the feeling was would bring banks back into the mortgage marketplace in a more meaningful way. Um, I mean, I would just love to know, how do you feel about that? Do you think that is it really capital that's driving the switch, the big switch that we've seen in the last 15 years? Is that a big piece of that? And do you think that reducing the capital requirements would mean a big difference in where business shifts to?
I think that is a big piece of what has pulled banks out of that market a little bit. If you add in like some of the former regulatory environment, specifically like some of the government lending, I think the risk was just too high and they were well capitalized and making really good revenue in other lines of business. So they were in a position to kind of, pull back from mortgage. But
Mhm.
as things start to open up a little bit and we see banks start entering the market again, I think it's healthy. I think it's
Yeah.
healthy competition and there's enough business for everyone. If you think about like kind of where we were and the market share IMBs have now. So I don't think, we'll lose significantly from where things are now, but I welcome it.
Yeah. Yeah. MBA also came out and were supportive of the proposal as well. They felt like it aligned the capital requirements better with what the actual risk is. And I know that we've always seen a trend here that when things get tough, banks get out. And maybe this would not make that swing so prevalent, especially in the community banking space. We've seen a lot of that. They trim their teams down to nothing and wait until the money looks a little bit more appealing and then and boost things back up again. So I feel like I agree with what you said. So yeah, AI, big topic. I'm hoping for you as I mean, I knew you initially as like a huge technology advocate. I think the first lab that we met at, I thought this guy is like he is on top of it. You are so far, I feel like you and other people like maybe Mike Metz were so far ahead of some other people in saying, hey, we should be looking at this. We should adopt this. We should make things easier for our team. The news out there, obviously, and it was a big part of our conference, was conversations related to AI. There are a lot more tools out there than there were in the past. It's kind of everywhere from income tools, QC, LOS automation. I'm interested in finding out from you, like, what are you deploying? Are there new things that you're deploying related to AI tools?
Yeah, so we are looking hard at the market. We're a Microsoft shop, so we adopted Copilot early on, and that's been really meaningful for us. We're looking at some underwriting, we're looking at some LOS automation. I think one of the big questions I always ask when it comes to technology is like, do you buy it or do you build it? And right now the market is moving so fast. I think, it's you're kind of waiting to see, what happens next with some of your vendor partners. Speed to value is always really important for me. So like you want to just kind of pick the right horse when it comes to some of these products. And I think when you think of AI, it should really enhance your people, right? And not replace them.
Right, right, absolutely. Is there one thing that you're willing to share with us today that, like, one thing that you did this last year that you feel like really in that vein is a big like game changer for your team? What's the one thing that you did that like sticks out maybe?
Yeah, I think it sounds probably simple, but it's really having these AI assistants in our meetings, taking notes, tracking action items, the days of kind of just pen and paper starting to go away, um, using the chat GPTs of the world, creating decks, use Gamma and make the most beautiful presentations in seconds versus spending a couple hours in PowerPoint. I mean, giving time back to our, leadership, to our most expensive people, that has really been a game changer for us. So it's really been focused top down on our key people and using some of these tools to really drive their throughput and be a force multiplier for them.
Yeah. Same here. I mean, when you're and we're a small team, so any hours or minutes that you can save anywhere in the process is always a great thing. I did something that I hadn't done yet yesterday or the day before, and it would have taken me a long time to do it, and I traditionally would have done it very manually. But I took two spreadsheets to combine them together to get to the end result of what I wanted, and it took me 20 minutes.
It's amazing.
I know it was lovely. Claude is my new best friend, for sure. So my new best friend Claude helps me every day with all of those types of accumulating data things. I think that if you're not doing something like that, number one, it's so refreshing. I get to then work on things that I would rather be working on than doing something that maybe I have to
Exactly.
drag my feet on a little
It's
bit. And our teams are the same, I'm sure. Use
it's
them
been really
for
empowering for us.
yeah, use them for their highest and best use. They get a lot more job satisfaction that way. Um, the conversation has been out there about end-to-end automating a mortgage transaction, without people involvement, I would say. Um, but yet there are so many compliance things that go on during the mortgage process. Do you yourself, I know you've always been, very technology driven. Do you have any concerns or thoughts about like what the compliance guardrails need to be related to anything that's adopted from an automation standpoint?
So we have a committee that focuses on it, and we source some of those team members from all assets, all of our departments, from sales all the way through IT. And that way you kind of have a voice from everyone. But I think some of the core tenets there is creating some policy and procedure around it. How do you protect consumer data? Just it's some of the basics, but just taking a responsible approach to it. Uh, we're looking at guidance from agencies and from state regulators. They're not really coming to the table yet. I think it's kind of new for everyone. So,
Great.
um, as those regulators and those agency partners start, putting out more guidance, I think you'll start seeing it become more um, assimilated to like what we are expecting in everyday mortgage compliance. But in the meantime, just doing something simple like putting some policy around it, uh, trying to avoid some of the what I call shadow IT and, just giving people guidance on how to do it responsibly. I think that's the best you can do right now.
Yeah, yeah, it's changing so fast, right? It's just every day there's a new something going on. Obviously, teams are going to shift a little bit, I think. You may not need as many people in one space as you did in the past, but I feel like there are other things that are going to happen along that need people with maybe a different skill set in them. Do you feel like compliance is going to become a not a bigger issue isn't the word I want to use, but become a bigger part of the mortgage process? And people that are shifting in their jobs, compliance people are going to be really, really important people in your organization. Not that they weren't before, um, because they were, but do you feel like that's going to be more of a focus, as things get more automated?
I don't know. Compliance has been so front and center for so long in mortgage. You know, thinking back to the days when there was almost zero compliance and it was like, licensing didn't even exist. Today we're highly regulated, so it's part of just, what you expect. Does it get even more intense? Hard to say, but for us, we're licensed in 50 states, so we're constantly going through examinations and, every product you bring to the table, everything you do, you think compliance first, kind of clear that hurdle, and then, how do you differentiate?
Yeah. Yeah. And maybe it's just that it looks a little bit different. Maybe all the automation and data that comes into play, maybe it eliminates some of that, right?
I think it could help you become more compliant, right? Like,
Yeah.
because you take a little bit of you know, I think human error out of the mix and you kind of stick to the rules, if you will, a little bit tighter through some of that automation and maybe that helps keep it a little easier.
Let's keep our fingers crossed on that one. I'm hoping for that one for all of our lender members in the hopes that it maybe starts to drive some of the cost of things downward versus going the other way. We're at the bottom of the hour already. It was so wonderful to talk
Wow.
to you. I know it happens so fast, right? It was so wonderful to talk to you in person and now on here. I really appreciate you stepping away for a little while and sharing your time with us while you're on your trip. And I hope that you have the most fabulous time with your team, that you all get refreshed and get to spend some time just chatting with each other and everything while you're gone before you come back to the Midwest. So thank you so much, Eric, for doing this with us. We really do appreciate it.
Yeah, it's a real pleasure. Thanks for having me on. I really appreciate it.
Yeah. And we will talk. We're going to talk soon, not as long this next time.
Sounds great. Looking
All
forward to
right.
it.
Thank you. We'll be back on the 20th, everyone. Thanks for joining us today. So we'll see you then. Have
Thanks,
fun,
Faith.
Eric. Yep.
Appreciate
Bye.
you.